BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's have a look at Bitcoin, and mostly just Bitcoin, a little bit of stocks as well, because the FOMC had an effect yesterday. We're sitting here on the 1 hourly chart. We can see that pump into resistance, back down to support. The support being this flat level that you can see on the 1 hourly, more or less 56,800. Take ourselves over to the weekly. What do we see around this area? 55,400 is your 20 moving average. A little bit above that, 56,100 is your 21 exponential moving average. Both of these being, well, as we were saying on the Patreon, not to give too much value away to people who aren't subscribed to the Patreon, but as we were saying on the Patreon, this is your first area as opposed to consider a dollar cost average into Bitcoin. Even though we do speculate even further downside to come in, 50,000 basically, and maybe even lower than that. But the first area is this, and the reason being is that standard Bollinger Band strategy is that when you're above the band, you're more likely to remain above the band, to the tune of 65%. So the odds are in your favour. You're more likely to bounce from here than you are to break down. But if you do break down, it's not unheard of. That's a 35% likelihood of it happening. There's more chances of this breaking down than winning the lottery, should we say. But I'm sure some of you still play it. So the odds are in your favour of a bounce, but again, when you stand back and look at the broader picture, I'd be surprised to see it hold. And even if it does break down, it's not the end of the world, because this is just a weekly. There are other time frames that we can think about, monthly being one of them, and the Bollinger Band centre down here is at 35,300. 21 exponential on a monthly is at 41,666. So all of this is relevant. I know it's confusing, so sometimes you're looking at different time frames. The best way to think about it is that the higher the time frame, the bigger the move, right? Clearly, obviously, if we're going to sit here and speculate that we could come down to retest a monthly Bollinger Band, that's a 38% pullback from where we're at right now. 21 exponentials, a 28% pullback. So obviously, big moves can be seen. Now, when you reclaim these, as we saw over here, we managed to get above it and finally sort of moved from it. Then you get nice big moves as well. If you take it down to the opposite end of the extreme, we're down here on the 15-minute time frame. And this isn't a particularly good example because we're up and down and up and down and up and down and up and down. We're within a range. But generally, you're looking at smaller moves on the smaller term time frames. The shorter the time frame, the smaller the move. The larger the time frame, the larger the move. But for the most part, the weekly is a big time frame for most people, and probably one of the most important, I would say, between a weekly and a daily. Most important. 4 hours is quite important. Anything below that is really a trader's tool, and not really much point in me making videos if we're basing our time frames on like hourlies. That's for people who have learned to trade, and because by the time you've watched the video later on this afternoon or whatever, completely irrelevant. Looking at that sort of time frame. But the most important, I would say, would be the weekly and the daily, because it allows you to work out what sort of trading environment we're in. And currently, we're still in a bullish one, all right? And to be honest, you can make the case that we're going to be bullish all the way down to 31,000, where the 200 exponential moving average is, and the simple moving average is just above it, around about 34,000. So it's interesting, you've got a 200 simple moving average around 34, and you've also got that monthly Bollinger Band sitting around that area too, around 35. So, I'm just putting it to you now that, it could happen. It could happen. Will it happen is a different story, but it could happen. But if it doesn't happen and you dollar cost average into here, at least you did it based on what you're looking at and not just a blind guess. And again, dollar cost averaging is about limiting risk, limiting exposure on the way down. In the last bear market, so I did do this. I sold around the mid 50s, and not all, but I sold a fair chunk. Quite a few Bitcoins I had to exchange at that point, because it was apparent that we were going to go down, not just because of what we saw on the charts, but there was a new strain, wasn't there, floating around in the air. And I remember what it was like when the first, strain, I don't know what to call it, YouTube, I don't know how they feel about these words anymore, but yeah, the first one had a dramatic effect. So I thought, well, it's fair to assume that will have a similar effect. So I sold, and then I started my dollar cost averaging at 40,000. That's right, I did. I started my first buyback at 40,000. Now, obviously, today, looking back, it's still okay to have done that, you know? Time has gone by, price is higher than 40,000. That was my first dollar cost average. But it wasn't my last. First, second, third, down around here. I didn't bother buying the lows. I bought the reclaim and the retest, which is around about here, and that was it really. So several dollar cost averages on the way down, all of which are now in profit. But you know, for a while, no, they weren't. You've got to trust in the process, trust in the cycle, base your buys and sells on what you know and what you think, and you know, only you at that point can take the rap. So this is the first one. It might not be the last, but it is the first one, and we haven't actually touched it yet, but we came quite close yesterday. So assuming that we're going to continue with this downside trajectory, which I don't see any reason it's going to let up, we're looking to actually, you know, confirm a cross on the MACD. We obviously recognise the bearish divergence on the money flow index on the weekly, which usually has an effect. I'm more inclined to look at stocks really, because stocks are doing the same thing. At the moment, we're having a bit of a move back up. Again, we're on the 1 hourly chart. We're having a little bit of a move back up. It's not looking too bad actually for stocks. We might continue with this move up throughout the day to see a rejection somewhere around, you know, maybe 5,100, maybe 5,140. Death cross retests basically. We do have some hidden bullish divergence around here as well, which is fine. But it's not enough to really get too excited about. So if we're going to zoom right out on the daily, what do we really see? A downtrend with resistances around, well, just below 5,090. So plenty of areas to get rejected from here. Yesterday's up and down move was continuation down in the morning, which I was kind of surprised at, and then that move up on the FOMC, which basically got sold at the Bollinger Band Center. Recognize this. It's just what I said, at the beginning of the video. Bollinger Band strategy. It's it's very simple and it's decent. It's decent. Sometimes the simplest things are the most decent. And you can see rejection. Once you got below it, you're more likely to stay below it. We're down below it. We came up to get rejected from it, and again, and again, and again. So you're more likely to maintain this lower portion of the band, which is has a descending resistance trend line, being the 20 daily here. So this looks like it still wants to go down. Evidence would suggest that it will want to keep going down. No bullish divergence on this daily. No real reason to feel like we're going to turn around on this. And even though we've got a little bit of hidden bullish divergence on this 4 hourly, it's not enough, because I would imagine it's only going to move into a death cross, similar to how it did yesterday, death cross retest. And if we move up any further, we'll do like a Bitcoin or Ethereum retest of the simple moving average, and that's where we were rejected on both Bitcoin and Ethereum on the 4 hourly time frame. There is no short signals on this one, so we're just trending. We might go sideways for a bit before the next move down, but I still believe that very much, in fact, that down is still the most likely scenario, and we should allow for that to play out. Not only because of stocks and Bitcoin, but the Dixie. So the Dixie did have a breakout, but it came down as a result of yesterday's FOMC, and it stayed back within the triangle. Now, look, this has both hidden and regular bullish divergence on this 4 hourly. And on the daily, even though that was a sharp wick down, we're still above our Bollinger Band Center. So look, it's the opposite of Bitcoin, it's the opposite of Ethereum, it's the opposite of stocks. So we're maintaining the band to the upside. So we're more likely to move up on this than down, because we've got a positive slope on that moving average, and we're being supported on it. So as much as we saw the move yesterday, and again, if you look at the video that I made yesterday, I said, this is bounce time, it's bounce time. But is it a bounce that you're willing to play? Because this is a bounce in the form of a downtrend, so you have to be very careful about your entry, and obviously consider exit points. Do not get greedy on it. So it was a likely scenario yesterday, and obviously we can see that has played out exactly as predicted. But now we're back to reality, which is the continuation of the trend, and that is up for Dixie, that is down for stocks, crypto, Bitcoin as well. And the only other thing that I'd probably be kind of interested in now is this oil trade, which again we had the breakout, now we've had the washout, which is kind of normal. And if there's an entry point, it exists kind of now. A golden cross retest on a daily is usually a very good place to try it from, and it wouldn't take long to know if you're wrong. We can also see that we're above the weekly 20 moving average, and the 21 exponential and the 50 all coming in outside of this descending triangle, which we have broken out of, and we're looking to retest. If we do wash out further and go down lower, we'll be talking around $75 a barrel, and that's where I would try another entry, because again, this worked, 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 this it all worked. So we're looking at $75 a barrel. Now the only reason I'm talking about oil is because oil is a predictor of higher CPI, which is inflation. So if you're going to start worrying about FOMCs, which seem to become fashionable all of a sudden, this might be something you want to focus on. If oil continues up, CPI will likely go up, inflation goes up. If oil starts to go down, CPI will basically go down, inflation goes down. And it's inflation, it's those CPIs, it's the FOMC that seems to be spooking the market at the moment, because everyone seemed to have thought in their heads that we were going to see rate cuts this year, and now we're talking about potential rate hikes. So all of that is what it is. There's nothing more to say about it, really. So we've established the trend will continue most likely on Bitcoin stocks and crypto, and same thing with Dixie and oil. So really nothing has changed. Yesterday was a bit of a strange, funny old day. Woke up in the morning to that dump, saw a relief rally, then saw a pump from FOMC, and now we're back to square one again, where I think we just continue down. So 56,000 thereabouts is an entry point for a dollar cost average entry in the form of, you know, building a portfolio of Bitcoin hodls or whatever. Also a potential trade as well, but I think since we front run it yesterday, maybe the trade might not be as appropriate as it would have been as we saw yesterday, which, you know, even though we front run it, we did have a move just above it. So we'll see what happens. Personally, I'm going to stick to my guns. I still think a consolidation is going to continue throughout the summer for stocks and Bitcoin and crypto. I think oil's going to go up. I think dollar's going to go up, and we'll find a better area, I think, for more instantly gratifying trades. But yesterday was fun, but now the fun's over, and we'll just have to wait for the market to tell us what it wants to do. Again, you know, looking at this on a weekly and a daily, I'm probably going to be saying the same thing, you know, for a while now. So whether or not you want to tune in for that, I will actually start making videos throughout the day, each day, on particular altcoins that I like. But if there's anything that you think you want me to look at, and I think it's worth talking about, let me know in the comments below, and I'm happy to. But that's basically what our Patreon is. If you join the Patreon, we look at these sort of things twice a week, Tuesdays and Friday evenings, and you know, we look at loads of charts. But at the moment, they all seem to want to do the same thing, because crypto is one giant machine that generally points in one direction. Unfortunately, that direction is the same as stocks. The correlation is very strong. So I think that we're just going to continue with the general trend. But it doesn't mean that we can't establish buybacks or plans or make a fictitious portfolio that we want to start to commit to later on this year, which is basically my plan. Right, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Feel free to join Patreon, Telegram, and all the other stuff. Other than that, take it easy.